Good morning. It's 11:05 a.m. Do you know where your home equity is? Welcome to the Velocity of Money. Here now to answer your questions about real estate, capital, equity, funding, and finance, your host of the Velocity of Money, Michael J. Barnes.
Welcome back to the Velocity of Money. This is Michael J. Barnes, and you're listening to KFNX 1100, Arizona's news talk leader. Today's show is sponsored by Velocity Financial. Call 480-835-6248. That's 480-VELOCITY for all your financing needs, anything residential related, purchasing, refinances, all that is out there. Still available. We have back in the studio with us today Mr. Dan Havey. Dan and I have worked together in the mortgage industry now for about 14 years, and we're happy to have him back. He's seen a lot of changes in the market, and thanks again for being here.
Yeah, Michael, that's a question I wanted to ask you because there's so much misconception in the marketplace today as far as what is still available out there for financing. I think a lot of people have this idea that it's impossible to finance a loan or get a mortgage, or you have to be able to put 20% down or have a 720 FICO score. Can you let people know what's really going on out there?
Well, you know, a lot of things have gone away. There's a lot of those old loan programs that were fancy ways to sell money and finance real property. A lot of that's gone. But the reality of it is, if a person has a minimal amount of money down, there is absolutely financing available through the Federal Housing Administration. 3.5% down, you can buy up to about $358,000 with only 3.5% down. Now, with Fannie Mae and Freddie Mac, we actually do have a few investors that will allow us to only put 5% down with those, and that loan amount, maximum loan amount is $417,000. So the reality of it is, there's still plenty of financing for primary residences. Now, in regard to looking at investment properties, believe it or not, there's actually still some stated income loans out there, but the stated income loan is for a non-owner occupied property. The interest rates are very high, and the reality of it is, you know what, if you can put 20 to 25% down and prove your income, you're better off using conventional financing. It's absolutely still available.
Now, if you're a first-time home buyer, you're living in an apartment, you're getting tired of it, you're looking at low interest rates, you're looking at the property values that come down 50%, FHA is going to generally be the direction that person's going to want to go.
Absolutely. And you know, Dan, with that $8,000 first-time home buyer tax credit, you know, that is a check that the government sends you for up to 10% of the sales price of the home. Over $80,000, it's capped at 10%. You're not going to get more than $8,000 back, and you may get less if you buy less than $80,000. But what's really interesting about this is you can actually, if you've already filed your 2008 tax returns, you can actually file a 1040X and get that credit sooner in a very short period of time. In other words, you don't have to wait till April 15th of 2010 to get your tax credit. You can put the money down today, close on the mortgage, move in, file your 1040X. There's a form, it's called the 5405, but that's not all that important. And you can have that money back in your pocket right away.
So I know that was part of the plan that came out today, and just to make it a little bit clearer for people is, let's just take an example. Let's say you buy yourself a $150,000 house, and you buy it as an FHA. It doesn't really matter if you put any money down or how you buy the house, but you buy a $150,000 house, you're going to get an automatic $8,000 tax credit that you can take off of the taxes that you owe the government. So let's take an example where you only owed, well, let's say you're a W-2 employee and pretty much you break even at the end of the year. You don't owe the government any money and they don't owe you any money. The government will actually write you a check for $8,000 for that tax credit. And if you buy it this year, you can amend your tax return for 2008 and get a check from the government for $8,000. Now that's not including the other tax write-offs that you get.
Good point.
For writing off the taxes on the house, writing off the the interest on the house. And so again, a $150,000 house is 6% interest, roughly. You're going to be looking at like another $10,000 worth of write-offs on top of that. Now, it's a write-off, not a tax credit like the other one.
Right,
So
you
you're gonna
point that
save
out.
you're gonna save whatever your tax rate is, so let's say you save 30% of that, that's another $3,000. So if you buy a house this year, you're gonna put an extra $11,000 in your pocket.
To your bottom line, yeah, that's a
So
good
if
point.
you buy a $150,000 house and you have to put 3.5% down, that's what, let's just say roughly $5,000.
Okay,
You just made $6,000. And you get to own a house.
and you're paying, your mortgage payment is more than likely less than or equal to what you're paying for rent right now, and you own it.
Right, exactly.
Yeah.
And you get the benefits of having your own house. And again, with property values having dropped so dramatically, and we'll talk a little bit more about this later.
No, hold
but-
on.